Hello, this is Mike Swanson of Wall Street Window. I'm actually in Dallas, Texas. I went to a conference and I'm flying back home tomorrow, but that's why I'm in this hotel room. And you can see it's getting dark outside, but that doesn't mean I can't do a video update with you before I go to dinner. And I'm going to highlight 5 stocks in this video that are really representing where the strength is in the stock market, but we've got to put that in some context. First of all, we're going into Thanksgiving, and historically, this week of the year is the week in which the market has the most odds of it being an up week. That's because the stock market almost always goes up into Thanksgiving. What happens after that's another story. But a lot of people, and I think that's going to happen. I think we probably will go up into Thanksgiving. However, most experts aren't just saying that. They're also predicting an end-of-the-year rally. Some even saying we're going to go back up to the highs. Now, I'm going to tell you, I don't believe that. I don't believe we may not, I think we're unlikely to see a huge end-of-the-year rally like all these people are predicting. And these people that are saying that were also claiming we're going to get a rally after the election. And instead, the stock market just went up the next day and then reversed, and many stocks traded very terribly last week, as I'll show you a couple of that in a second. But I really think the move down in October is a serious situation. The NASDAQ, the S&P are below their 200-day moving averages. Yeah, we can bounce up to them this week or even close above them. But for the long term, I think this is troubling action in the market. We've seen many stocks break down in October, and I think we're seeing a topping process. But I say that with the knowledge that most people disagree. Even people that are watching this video are going to disagree with this. But let me show you a couple stocks. Here's Apple. No, Apple is not one of the 5 top stocks I think anyone should buy. If anything, I think people that own Apple should get out of it. And Apple had earnings the other week and just gapped down, and it's been trading terrible ever since. But Apple's already below its October and September and August lows, even though the NASDAQ is above its October low. Apple is now a laggard stock. In fact, Apple, when it came out earnings, said it's no longer going to report sales for the iPhones, the number of units it's selling. And here's NVIDIA. NVIDIA traded very weak in October, and then Friday it fell 18%. Now, NVIDIA was once a must-own stock, called a momentum monster by some, and it went straight up in 2017 and 2016. But now it's broken, and it's fallen, and it's fallen away from its 200-day moving average even. It's now in a stage 4 decline. But look at Facebook. Facebook also has been an awful acting stock since July. It's extended down away from its 200-day moving average. When you see stocks falling away from their 200-day moving average like this, they're not stocks you want to own because the long-term trend has shifted. And this is why the stock market as a whole is now in a weakened situation. We've seen many rallies that only last a couple hours or one day, and they just fizzle out. And this is why this is happening, because so many individual stocks are now trading bad. And look at Boeing, because Boeing was a major leadership stock inside the Dow. In fact, Boeing broke out to a new 52-week high in September, but that turned out to be a false breakout, and Boeing since then has gone below its lows in September, and we're seeing false breakouts in stocks. That's why I highlight Boeing and want to note it to you. And look at Caterpillar, which of course is also broken down. The point in showing you these 5 stocks before I get to the 5 strong ones is just to emphasize that these 5 stocks are really more representative of what's happening throughout the stock market, and they are this is the reason why the stock market has been trading the way it has since the end of September, and why I am very skeptical of people who are predicting this giant end-of-the-year rally to the highs when these stocks are acting like this, and these same people were saying there would be a giant rally after the election. And the final nail in the coffin, which is kind of the good news in a strange way, is there are pockets of strength. Let me show you 5 pockets of strength, 5 top stocks. This is Coca-Cola, symbol KO. Look at what Coca-Cola's done. It made a new 52-week high on Friday. In fact, it's way above its October lows. Another stock acting strong is Johnson & Johnson. Johnson & Johnson is above its September and October highs. did that on Friday. And take a look at McDonald's. McDonald's broke out basically of a consolidation in October while the stock market was dumping, and has done very well. Went from basically 170 to close to 190, and look at what it's doing. So that's a pocket of strength. And look at Merck. So one thing I'm going to tell you is, look, if you believe there's an end of the year rally, that doesn't mean you should go try and buy Apple or Facebook or these laggard stocks. You should put money into where the strength is, and that's how you should always be thinking from a stock trading perspective. And look at Merck. Look at the strength in Merck. No one can deny that's going on. And finally, one final of these fifth stocks I want to show you is Duke Energy, a utility company that pays a hefty dividend. It's not under 52-week high, but this stock barely even dropped in October. So their stocks, what all these five stocks represent, though, are so-called defensive stocks that are immune to economic slowdowns, economic recessions. People aren't going to stop using utilities, and people aren't going to stop going to McDonald's. In fact, if there were a recession next year, people would actually be more apt to be going to more McDonald's more often in order to save money. Food at McDonald's is even cheaper in many cases than what you can buy as a meal in the grocery store. So people are shifting basically into defensive plays. And defensive plays historically are plays that go up at the very end, the ninth inning of a bull market, or in the beginning start of a bear market. This is historically the type of stocks that do well during those times, and that's another reason not to just say, oh, they're saying an end of the year rally, so I don't have to think about anything. No, the stock's going down and going up tell us this is really a time to be cautious on the stock market. Even though, yes, there's opportunities to trade, opportunity to make money, and there's other sectors I'm interested in and talk about in greater details, especially for Power Investor members. And I'm also in this moment, because of what's happening with what you see with stocks moving like this, there's more stocks dumping than gapping up and doing really well. I'm even betting against individual stocks that I think are junk, that have high debt loads, that I think just decline, and we're seeing that happen of individual bad stocks since the beginning of October. So this is my video update. Yes, I do think the odds are we'll see some positive green days this week for the market averages. No, that doesn't mean I'm going to believe we're having an end of the year rally or grab onto phrases like that. I focus on where the money is flowing in the stock market. It's flowing out of tech. It's flowing out of past fads and in the defensive sectors. And I think it's going to spread even more into even more defensive sectors that I have long positions in. But I don't have any positions in any of the stocks I've showed you, just for disclosure purposes. I'll tell you that. So we'll talk later, and this will be an interesting week. And as you're traveling too, have safe travels.